Welcome back to the Sporting Crypto podcast. Back again with another episode, and this time a returning guest, John Timoney Gomez. How are you doing?
I'm great, Pat. Happy New Year. Happy to be here.
Happy New Year too. Thanks for doing this on what feels like most people's second working day, basically, right?
Yeah, it depends who you ask.
And just remind us about yourself and what Uptop do as well.
Yeah, so Uptop is a fan engagement wallet and platform. It's live now with two clubs in the NBA, the Detroit Pistons and the Cleveland Cavaliers in our second season. We're also managing the reward program for LSU athletics. We build leveraging on-chain primitives, and that was the nature of our discussion last year when I was in London. So happy to be back here and, having expanded the product and have some exciting updates going forward as well.
And you've since that podcast been acquired. Tell us a little bit about the new company that owns Uptop.
Yeah, so Rain is a Fintech. They acquired us late last year. The company is one of the major fintech enablers of stablecoins. Our vision was always that, on-chain primitives would proliferate in the sports and entertainment vertical at Uptop, and we're experimenting with loyalty and rewards. Rain itself is the largest enabler of crypto-backed card programs globally, live in many markets and expanding. And they had a similar vision for how loyalty would be executed. And so through the acquisition, we're keeping the Uptop entity and brand and expanding in sports and entertainment through co-branded wallets and card programs. But we're also building out rewards infrastructure for Rain's core clients as well.
That's really interesting. And the stablecoin world has obviously exploded over the last 18 months, and Rain, I think, are one of the fastest growing companies in that space. Tell us a little bit more about how Uptop is going to help Rain and Rain is going to help Uptop.
Yeah, so I guess philosophically, what's happened over the last 18 months is really, especially in a consumer payment sense, people are trying to treat tokenized money or interact with tokenized money the same way they always have interacted with fiat, which is they expect it to just work in consumer contexts. They expect merchants to accept it. That was the nature of Rain's strategy and partnership with the card network, and the ability to use tokenized money to transact was always the goal, right? Adding a utility layer around a form of money that already had very interesting properties in terms of being able to settle instantly, etc. Now, the next step is what properties have been built around fiat money that consumers also expect and love, and one of those is really engaging and really rewarding loyalty programs. So this is no different. We're now the team that is supporting that kind of next feature build out. We're excited. We'll launch something this year to support all of those clients. And our sports and entertainment build out has proven to be a really great testing ground for a lot of these features. And we're likely going live with stablecoin support in a major stadium in the United States sometime this quarter or next. So really excited about that.
And let's dig in a bit into some of the case studies that you've got. I think the Cleveland Cavaliers example is something that we've written a lot about on Sporting Crypto. Talk to us a little bit about what Cavs Rewards is and why it's different to most other rewards programs, what the on-chain piece of that has done for both you, the business, and also the businesses in Cleveland Cavs, and then the fans as well.
Yeah, so, for us, it was really about building a rewards program that had parity with some of the best programs in the world. I'm talking about brands like Delta Sky Miles that sell billions of dollars in miles per year, Starbucks that has a great loaded value system that is larger than many banks in terms of deposits, many major banks in terms of deposits. And yeah, it's pretty incredible what some of these brands have achieved with teams of thousands of people in the payments field, especially, right? Because they're moving value. We from very early on made the design choice that every fan should have a digital asset-based wallet, and the goal there was essentially to be able to support value transfers that are very small or very large or based on logic and programmable, and leverage digital assets to achieve the same kind of end state that maybe a Starbucks has, but with far fewer resources. We were a startup and a small team, and just betting on a better, in our view, infrastructure stack. I think the world is starting to catch on to that design choice being the right one. And most teams that are building now in some sort of value movement are sort of embracing these primitives. And so we're happy we made that bet early on. What it allowed us to achieve with the Cavs is essentially an assetized rewards program, something that actually generates revenue. We enable them to be a points issuer. We enable them to have an open loop system. So we sell those points to sponsors. It's a rate card asset that's at a pretty interesting revenue run rate at this point, and the team over there is really considering it an important asset, right? The same way you would sell a jersey patch or a stadium naming rights. The rewards program is becoming a significant line item that everyone's paying a lot of attention to. And that's primarily been the basis of our expansion. People aren't exactly, super concerned about how we build. It's more what results we can achieve. The same way you wouldn't ask, a SaaS company if they're a Google Cloud or an Azure project, right? We just have been driving good results with these rewards programs, and we're growing them. And it's proven to be a really great set of experiences to jump right into Rain and start building value.
And then, of course, it's expanded into another NBA team, Detroit Pistons. You obviously mentioned the LSU rewards program. I guess the Detroit Pistons program is quite similar. The LSU athletics one might be a little bit different considering all the sports. Walk us through those two case studies as well, because it's fascinating. Have you seen the same success that you've seen at the Cavaliers as you have with your two new companies that you're working with? What are some of the nuanced differences, the fan bases, and maybe the sports as well that have triggered product iterations?
Yeah, look, it's the launch of the Pistons has been very successful. There's a lot of really interesting brands. Kroger is participating as their grocery partner. That's been incredible. People are loving it. In the case of LSU, there have definitely been things that we're adjusting. We're supporting a multi-tenant architecture in some sense, and what that means is like every team has a different, maybe some different implications on how ticketing is done or what facilities they're using. So all of those integrations have to be designed in smart ways. But the team, is really excited about it. It's a huge proving ground for us to kind of understand the college sports fan in the United States, which is an enormous market. There are slight nuances that are different between, NIL and, how sponsorship assets are sold in college versus professional in the US. And that's evolving very, very quickly. And we've had to stay, on top of it. Also, there's a lot of new fans every year because new students show up on campus. So that's been an exciting aspect, and just trying to understand all the behavioral things there. I think what's really interesting is it's a good proving ground for us. We've been very excited about the idea of partnering directly with leagues as well that may have 30 plus teams within the leagues, and structuring a program that works well in that context. And LSU is a really, really good test case for that, right? For our tech stack, we can support many, many teams in one branded environment. Could we do similar with a league? And so I think that will be an important step for us to go through and sort of test that design choice.
It's amazing to see a company in the space kind of working with so many big, recognized brands with so many fans. The question I've got is, what is the aha moment usually for rights holders when you're speaking to them, or anyone in the entertainment space, really?
It's actually very interesting what we've seen recently in recent conversations. I think, post joining Rain, people have realized the direction that we're headed in, which is to be a full end-to-end wallet-in-a-box solution for these brands. And they sort of have the aha moment that they've loosely been thinking about for a while, which is what's been tried in the past just hasn't really been executed well. But doing it right would be a major undertaking, right? So there's in the sports industry that's notoriously understaffed, there's all these competing priorities constantly. And really the main focus, as we've spoken about in the past, is fielding a great product through the team and the management, figuring out how to reward fans and have them feel appreciated on a continuous basis is super, super challenging. But you do participate in these programs in your day-to-day if you're, loyal to an airline or to a quick service restaurant. So people understand that it can be executed well. And they just know that it requires a ton of resources, a lot of fintech experience, and then you can, licensing and other capabilities, then you can, really achieve parity with those programs. So now people have seen that is the direction that we're taking, and it kind of clicks for them that we're, our goal is to really be an end-to-end provider that makes no compromises on the experience for a sports fan.
And talk to me a little bit more about the aspect of kind of on-chain or tokenized loyalty, because I think there's been a lot of attempts to kind of create something in that space across the kind of sports, entertainment, music as well has been a big one, film. Why hasn't it taken off yet?
Yeah, I think a lot of the previous attempts, we've recently been having discussions about, kind of the retrospective on how the market evolved. I think a lot of the previous attempts were overly focused on collectability, and that appeals to a certain subset of fans, a certain community that may be really, really deeply engaged with collecting and maybe, embracing digital assets simultaneously or in other ways. And this is kind of their interest just happens to intersect. And we always, from the inception of our company, viewed that as sort of a limited TAM. The real TAM is, the people who are already engaging through various channels with the clubs that they support and love, whether they go in person, which is, a small subset of time, but a very important interaction, whether they're following along on social media or, watching through the broadcasters. And we always view that population, just the person who's engaged and spending and, has a sort of deep fealty as the addressable market, and try to understand them and what they want. And it's really, really simple things. So it's one thing we hear is often is, I struggled to renew my season ticket every year because prices are getting pretty high in sports, right? It's the accessibility is an issue. And it's not just the ticket price. The ticket price is fine, but I have to go drive to a location. I have to find parking. Parking is expensive and surging, and concessions are expensive. So it's really the total kind of overall cost. And I think this has been a common theme in the UK as well, where people feel kind of tapped out in terms of the direct extraction of value from fans. So we always felt that indirect value creation that doesn't put a burden on a fan should be our number one focus. The problem there, and this is a problem in loyalty and rewards in general, is that those consumers are the most frequent transactors. And moving funds, moving money, moving value in the legacy fiat infrastructure is expensive. And it's kind of counterintuitive that your most loyal customers from a fixed cost perspective end up being the highest because they're moving small amounts of money inside or out of an application, or they're transacting often and generating high card fees for the receiver. So how do you create an experience where more loyalty doesn't mean more cost for the rights holder, and it can actually reward the fan? And so we've thought of use cases such as what if, a fan shopped at a sponsor within the previous week, and we could drop, $5 into their wallet before a game that could only be used for parking, right? How would you build that interaction? And when you really start to analyze it, it's impossible to execute with that level of sort of high fidelity if you don't embrace modern approaches to money. So that's what we decided. And so that's why we have sort of the foundation to really test sort of the cutting edge features that we're bringing to market.
So to summarize, the reason why a lot of these partners, sponsors don't have the kind of level of granular insight into the fan, but also ability to activate the fan is because the technology just isn't there. And the kind of modern rails using blockchain, using stablecoin payments allows you to reinvigorate all of those ideas.
We believe that every marketing message in the future will have some level of performance measurement that isn't just impressions, right? And while there's tremendous value in brand affiliation in this industry, and that's been proven year over year with what the major brands do around activating during a World Cup, or buying stadium naming rights. It's proven to work in many regards, but it doesn't give the CMO of that company one important thing that they care about, which is conversion attribution, right? And we think that category is going to become just as big, if not bigger, in professional sports, so that when a CMO is deciding whether to spend more on running ads on Meta versus a relationship with a sports team, they have channels with that sports team that can prove the same ROI. They can literally measure the ROAS of their spend. So
define ROAS for us.
The return on ad spend. So I kind of said it twice. But anyway, yeah. So they can literally measure the ROAS with activating through a digital wallet.
Really interesting. And before we move on to part 2 to talk a few other things, we'll take a quick pause here to thank the sponsors that make this podcast possible. This podcast is sponsored by the Hedera Foundation. The most beloved sports brands understand that what fans want is simple, a reason to be passionate. The Hedera Foundation enables brands and fans to share their passion on-chain using the Hedera network, the most used sustainable enterprise-grade DLT for the decentralized economy. I'm going to ask you another question here. There's this whole idea of opening up the loyalty piece, because right now, if you think about it, right, American Express need to do a direct deal with, let's say, a grocery store or let's say any realtor have to do a direct deal there that has to be Amex accepted on the terminal, and then when you pay, there's some sort of point back to you. Talk to me about how blockchain, and especially in the context of sports, can open that up to make it a lot easier for that kind of like quasi-permissionless opt-in, but also the points themselves being able to either be swapped, reimbursed more easily, exchanged to other participating partners, and so on and so forth. And then how does that contrive with the idea that brands want to own that stack, like the owned stack versus the kind of open, more egalitarian future of like tokenized loyalty? How do those two things actually intertwine?
So for us, what we've always thought about is sort of democratizing the access to these primitives. So a lot of what you see in loyalty is you can't generate good margins unless you have an insane amount of scale. And what a sort of decentralized approach or an on-chain approach can give you is sort of the network effect of many, many participants generating scale, and you just bring it into your wallet or your branded environment, but really you're interacting with some larger protocol or larger network outside, and you're just borrowing sort of those capabilities because they're composable. So Amex has the leverage to go to brands and cut major deals, whether they are, incentives and value that, they can give through statement credits, right? There's been a lot of discussion about this in the reward space over the last year as the prices for some of these premium offerings have been going up. It's like, yes, but they come back in statement credits. But they're leveraging these bilateral partnerships via the major distribution that they have through programs that they've grown over many, many years and merchant relationships that they've grown over the decades as well. We believe that, on-chain primitives can be useful, for a small neobank that's emerging in a frontier market, or a sports team to benefit from the same kind of network effect. And that's part of our strategy at Rain and Uptop, is to create a network effect that's large enough for us to generate the value for the small guys as well. And so they can participate and start growing from the ground up with competitive offerings to, major programs. So that's how we're thinking about this philosophically. It's all about access, the same way stablecoins are really about access to higher fidelity money. An on-chain rewards platform is about the power of a network and what it can achieve.
Are brands ready for that? That kind of openness and accessibility into their brand?
I think it's the same as, what Rain philosophically has done, right? Which is, the point isn't for merchant acquirers to necessarily be ready to settle directly in stablecoins. The point, the job of aggregating merchants is something that Visa has done for decades and done really well. And, we don't need to reinvent the wheel. We feel the same way about rewards. The brands don't necessarily have to, do any bespoke integrations or lean in. We should be a technology provider that completely abstracts that away and helps them kind of tap into these primitives just as a performance marketing or conversion-based kind of relationship, right? So that's how we see it. That's how we've designed our programs with sports teams today, and we'll probably be taking that direction, as we test different verticals.
How many more do you think we'll see in 26 from your end, if you had to guess?
Various. So I would say various. We're really excited to announce a few more clubs here in the coming months. I'm particularly excited, like I said, about the opportunity to, work with multi-team organizations. We're starting with a college team, but I think that strategy can be taken elsewhere. And yeah, our goal is to keep growing, tens of thousands of users per team at a time, and perhaps perhaps this time next year, we've more than doubled. So we're excited about that.
The last thing I wanted to close up on is there's this idea that there is so much money locked in unused loyalty points, and that's across all of commerce, right? How do you think about that from an Uptop perspective?
Yeah, so that's a really hot topic, I guess. A lot of people discuss this idea that banks have these runaway liabilities, and that's because they're not the redemption side. They're usually enabling these experiences in some sort of portal where you can, book travel or you can exchange into miles, and they have no way to play with the value, right, of the points that they've been issuing, because you can't go to the bank and redeem something that interesting. So I guess the number one thing I would say is that, across the portfolio of neobanks that we work with, they're actually experimenting heavily with that idea, right? How do we create value on the redemption side?
What does that mean in layman's terms if you're not kind of very experienced on the financial side?
Yeah, so a lot of loyalty is about generating really rewarding and high perceived value experiences that have some delta to the true cost of being able to fulfill them, right? And so if you're an airline, you have an unsold ticket on a flight that is going to have to fill up with fuel and staff and clean and do all of the fixed cost things anyway, if there's a person sitting in that seat or not. So a lot of the sort of profit margin of the loyalty programs, which in many cases is where the true profits of the whole brand are coming from, is about having someone spend miles on that seat, right? That was going to go unsold anyway. So they manage the redemption inventory and as such can play with the pricing and optimize for it. In the case of a bank, no one's really going to the bank and saying like, hey, I really want a branded, pen or something. And, so a sports team has inventory, right? They have merchandise, they have seats, very, very similar to airlines. They have money can't buy experiences that, could be like, your name goes on the Jumbotron when you are proposing to your significant other.
And they have huge sponsors as well, right?
And they have huge sponsors.
Airlines don't have sponsors. They are the sponsors.
They are the sponsor, right? So they're the middle of a network, right? That we've been successfully tapping into with a lot of brand relationships that we're generating. So they can play with that redemption value, and banks historically have not been able to. But what we're seeing from innovators, which is these stablecoin based neobanks or these other takes on fintech coming from fintech, is there are certain things that you can do for your customer. You can get really, really good at concierge services. You can get and manage all of this stuff via WhatsApp or another chat application. You can get very good at selling other valuable things like cell phone plans or cell phone minutes, and international SIMs and different stuff like that can all be part of how you reward and engage the person who's giving you their primary account, right? And sort of using you as their daily financial services provider. So we think that's evolving, and then we think that we need to be able to enable anyone who's doing this to tap into as much of our infrastructure as they want, whether they want to hold the liability for points or not. They should be able to kind of design things their way. And I think in sports and entertainment, Uptop itself will always be very forward deployed because of the nature of these businesses. They are usually not as heavily resourced to build digital products. So we will always kind of be working hand in hand with those partners, but always with the idea that our infrastructure should be reusable by anyone who wants a great loyalty program.
Let's quickly double click in some of the numbers that you're seeing, because from my perspective, this feels like only the beginning for you folks in terms of the teams that you're working with, the franchises that you're working with, and how deeply integrated you are, and how big this can become. But how big has it been so far?
Let's just say our customers are very happy with the results. We're one KPI that I would definitely feel very comfortable sharing is that we're the number one reason why people are opening up mobile apps for teams in the first place. So when you go in, you really want to kind of check your loyalty balance. This is happening with tens of thousands of active users per property, and it's growing, and it's something that gets bigger year over year for each club. The revenue is quite interesting. The unit economics are performant. It's something that we've always thought about as attracting fans. Really, at the end of the day, if you look at the top 4 leagues in the U.S., there's 30 teams per league, more or less. The total number is small, but there's millions and millions of fans. So we just need to create a product that the fans are happy with. And when which we will be, in more than 10% of one of these major leagues by footprint in the next quarter, then you can start to see how that adds up in terms of total fans, just based on how these folks engage with the properties that they love.
Anything that I haven't asked you that you wish I did?
Yeah, I mean, I know you're a huge. No, not really. I just surprised you didn't check in on our constant discussion around European football, soccer. We call soccer, right? Which is a sport that I also love.
Let's finish up on that. Like, what's the big difference, and how hard is it to break into European soccer compared to the NBA or a college athletics brand? Right? What are the nuances there?
Yeah, it's funny. Like, I've loved all the conversations that I've had. I think there's always, it's like, in the US, there's always a healthy level of belief and in the future, and there can be, maybe perhaps an interpretation of skepticism in Europe, which is sometimes something that I have to work to overcome. But I would say that as of late, I've been really, really excited about sports in both Europe, and the UK, and I think that it's the fandom is just so special there, that for us, we're starting to see some green shoots, and we're really excited about it, and hopefully we can catch a few football matches in the coming months.
Awesome. Well, that was great, John. Where can people find out more about you?
Yeah, so we're still at uptop.xyz. For our website, you can request a demo in there, find out more about the offering. And Rain is at rain.xyz. So really excited to be wearing a couple hats now and sort of pushing here on digital asset-based innovation.
You can find me at Pep Barisha, LinkedIn, Twitter, and you can find us on sportincrypto.com, and you can sign up to the newsletter at newsletter.sportincrypto.com. John is a reader without breaking any GDPR confidentiality rules. I do see his email on the list, reading here and there, so that's good to see. And just remember that none of what we've said is financial, business, tax, or any sort of advice, and some of the subjects that we talked about, crypto, etc., blockchain, are not regulated in many territories that you may be listening to. So stay safe out there. And thanks very much again for listening or watching. We'll have more sport and crypto content for you soon.